So today I entered a position. I wasn't able to monitor it really well. I just got knocked out. I mean, honestly, I was just very busy doing a lot of other things today. So I wasn't able to monitor the charts as much, wasn't able to monitor the trade as much. And I had a poor signal as well. So I couldn't like checking the app. It wasn't working out, honestly. I set this trade basically off the usual one of the rules, and then I just got hit out at the stop loss. I didn't get to see exactly where I got hit out, but I'll actually be able to review it now. So, you can see it March 13 here, and I think I set the time to. Oh my gosh. Okay, okay. So this is 10. Oh, right? 10? Hmm. So 296.64. When did I enter? Okay. So I entered bearish here. Okay. So I entered to the downside on this 11 o'clock candle. These EMAs can go. Right, so I entered to the downside on this candle, the 11 o'clock candle. Reason was this is a bearish engulfing candle. So I wanted to take it down and have my stop loss, I mean, a little bit above here. But it didn't continue to go down until this candle. So, I mean, there's nothing I could do about this one because I could see the MACD falling down as well. But it just didn't push down with that strength. Hmm. So I got hit out, I guess, on the next candle at 29736. I entered here 29664. Yeah, I had a stop loss just a little bit above the previous candle, and that just hit me out for a loss of 73.50. But today is different because we're gonna actually like do some back testing just to see where I would have entered, what it looks like on the Nasdaq 100. Because I'm seeing this would have been the best trade today. This one. So this is like double confluence plus triple confluence. So you had a three line strike bear, a bearish engulfing candle, and you have weakening MACD. This would have been good. This one you have those three factors too, but your stop loss is where you would have gotten defeated. I want to say the Nasdaq 100 because I want to trade this on a funded account actually. So I want to see how the strategy plays out here. Hmm. This was CPI as well. So I should also put out CPI somewhere as well. So we can check that out. It's easy. Just hit news. It actually matched expectations. So bearish, hmm, this bearish would have got you now. This is the same like the other chart. I would have entered here, stop loss a bit here, got cleared, but this would have been a good play. The three line strike and the bear. Hmm. and you could have taken this down, down, down. Okay, okay, all right. So something else I wanted to look at was, all right, what's comfortable range? Let's say, where's my tools? So a comfortable range where you enter and you say, okay, what would be a risk? So keep it flat. 10, no, let's go like 15, 15 pips. How much is that? From 184 to, this is 15 pips. So entering that way, I wouldn't get stopped out if I'm risking $15, which is 0.01. 150 if it's 150 if it's 0.1. So 150 is like the max thing as well. The max daily drawdown, right? So say I caught the swing. Already some of the swing. Okay. Okay. So and say you risked at both things. So someone enter here now. Alright. I'm gonna take another 150. I'm gonna take a 150 loss here. Is it me? Take a 150 loss there. Take a 150 loss here. See it if I meant this. Okay, so interesting. I'm just looking at how could have traded this because these signals do offer you some help. It's just catching the right ones and just not taking all of them. Make sure that everything matches up. So this one would have been bad, would have damaged you. This one would have been the great, like a engulfing, building of the level. Continue. As it relates to the CPI release, here's the inflation breakdown. This is from CNBC. So they say the consumer price index rose by 6% from a year earlier. So 6% was actually the expectation. The expectation. So the annual inflation rate is slowly but steadily declining from its pandemic era peak of more than 9%. The failures of Silicon Valley Bank and Signature Bank raise fears of a so called hard landing. That scenario, which isn't assured, would reduce inflation more quickly, but at the cost of a recession. So, the annual inflation rate in February continued its gradual cooling trend, though it remained well above policymakers' target, and their target is 2%. Ah, so here's a chart. It shows that eggs is a huge gainer for inflation. Butter, airfare, fats and oils, cakes, bread, sugar, motor vehicle insurance, utility, piped gas service. Hmm. Energy 5%. What's the cheapest? Used cars and trucks. Interesting. February's readings was in line with economics projections. It follows a 6.4% gain in January and 6.5 in December. It's still high, obviously. So I had to come back on because I think this is important to note. But like as soon as the Fed said that they would backstop the banks, it was this bullish movement. So we're looking at $22,000 Bitcoin. Bitcoin is at 24,000. So when I took the screenshot, Bitcoin just started to move. I was looking at it for a trade. I'm like, nah, this is obvious. This is gonna move. And look at this. So I took the screenshot probably Sunday. 22,000. So I took the screenshot somewhere on here. Oh, okay. And Bitcoin just been rallying since then. 25, 26, 500. Wow. This thing is moving, yo. Moving. I'm wondering if this, just them showing that they're offering some sort of backstop is overall bullish for the market. Does that show signs of easing, or just Fed not too tight? Fed, um, they're open, right? So that's basically what I wanted to come back and show you. I'll add all of these to the video, so you'll see how them come up. I'll see you in the next video. Bye bye.